Imagine finally paying off your home. 30 years of payments, no more mortgage, no more bank. You'd think that means you own the house. But every year, another property tax bill shows up. Miss it, and the government can take your home you already paid for. Team, that's the reality of property taxes. And in 2026, a growing number of states are openly questioning whether that system makes sense at all. Not tweaks, not credits, not caps, complete elimination. 5 states are now pushing serious proposals to end property taxes entirely, and number one on today's list already has billions set aside to pull it off. Make sure to watch until the end to see what that state is. But before we get to that, we need to start with a state where property taxes aren't just unpopular, they're devastating families. Coming in at number 5 is Pennsylvania. Now picture rural Pennsylvania. Old stone homes, properties passed down for generations. Now picture losing that home. And not because you stopped paying the mortgage, but because you fell behind on property taxes. That happens to about 10,000 households every year in Pennsylvania alone, and the core issue is schools. Nearly half of all public school funding in Pennsylvania comes from property taxes, one of the highest dependencies in the country. And for decades, that's been the reason nothing changed. The argument was always the same: eliminate property taxes and schools collapse. Until now. In 2025, Pennsylvania lawmakers introduced House Bill 1649 and Senate Bill 962, two companion bills that would permanently eliminate school property taxes statewide. Not reduce them, not cap them, eliminate them. Now, the proposal replaces that funding with a mix of a slightly higher sales tax and a modest local income tax, spreading the cost across the broader population instead of placing it almost entirely on homeowners. Supporters say the goal is simple. No one should be one bad year away from losing their home, whether that's a medical emergency, a job loss, or a temporary financial setback. Now, the proposal does face a tough road politically, but it represents the first serious attempt in Pennsylvania to break the decades-long link between school funding and property taxes. Quick pause. If you're watching this because you're trying to make smarter long-term decisions around housing, taxes, or real estate, this is exactly what we work on inside our real estate investing program. We don't sell hype or shortcuts. We focus on understanding how ownership, taxes, and cash flow actually work in the real world, so you're not caught off guard by things like rising property taxes or changing laws. There's a link in the description if you want to learn more. Now let's get back to it. At number 4, let's talk about Texas. And Texas loves to talk about not having any income tax, and that part is true. What gets mentioned less is how the state makes up for it. Property taxes fund almost everything in Texas: roads, schools, police departments, fire departments, and they're all tied directly to the value of your home. That's why Texas has some of the highest effective property tax rates in the entire country. Even on a modest home, it's not unusual to see annual tax bills of $6,000 to $8,000 every single year. A lot of people who moved to Texas to escape high taxes didn't realize they weren't escaping taxes. They were just changing which line item they show up on. But Texas didn't ignore the backlash. In 2023 and 2025, voters approved a series of constitutional amendments, most notably Prop 4, which dramatically expanded the homestead exemption and reduced school property taxes. That vote unlocked what has now become more than a $50 billion in total property tax relief, making it the largest property tax cut in U.S. history. Homestead exemptions increased substantially, seniors and disabled homeowners received even larger breaks, and school property taxes were cut by nearly half in many cases. But here's the key point: that's relief, not elimination. Home values keep rising, tax bills keep coming, and that's why the Texas leadership is now talking about the next step: eliminating school property taxes entirely and putting that question directly to the voters. Texas is building momentum year by year. Billions first, elimination later. Now, coming in at number 3 is Florida. Florida's governor, Ron DeSantis, has been unusually blunt about this issue, saying, if you pay off your home but still write a check to the government every year, are you really the owner? That question has become a political talking point and a series of legislative actions. Right now in Florida legislature, there are multiple House joint resolutions aimed at drastically cutting or phasing out property taxes on primary residences. The most talked about proposals are HJR 201, which would amend the Florida Constitution to eliminate all non-school property taxes on homesteads or primary residences, and HJR 203, which takes a phased approach increasing the homestead exemption by $100,000 each year for 10 years. If either of these resolutions passes the legislature and then reaches the ballot, Floridians would need at least 60% voter approval to amend the state constitution. The practical implication here is if one of these amendments becomes law, many Floridians could see their property tax bills drop dramatically, potentially down to $0 for local levies. But school taxes would still remain unless a further constitutional change is passed. The debate is heated because property taxes fund local services like police, fire departments, libraries, and roads. Eliminating them means figuring out other ways to pay for those services. And there's a secondary effect most people don't think about: home prices. Analysts estimate that eliminating property taxes could push Florida home values up 7 to 9%. Which helps current owners but makes buying them even harder for the next generation. Florida voters face a real trade-off here: long-term ownership freedom versus funding the services everybody uses daily. The decision heads to the ballot in 2026. We'll see what happens. At number 2, we have Ohio. Ohio's push didn't start with lawmakers, however. It started with homeowners, opening their property tax bills and feeling blindsided. One homeowner in particular saw her assessed value jump more than 50% in a single year. No renovations, no neighborhood transformation, just a massive tax increase. She started talking to neighbors, then strangers, and quickly realized this wasn't isolated. It was happening all over Ohio. That frustration turned into a grassroots movement called Citizens for Property Tax Reform. Not backed by lobbyists, not driven by political parties, just regular Ohio homeowners. Their goal is simple but radical: a constitutional amendment to eliminate property taxes entirely, taken straight to voters. That effort is officially underway. The amendment language has been approved for circulation, which means organizers are legally allowed to collect signatures, and to qualify for the November 2026 ballot, they need over 400,000 valid signatures from registered Ohio voters across at least half the state's counties by that deadline. As of the most recent updates, organizers have reported collecting well over 100,000 signatures, which is a strong start, but still far short of what's required. Not everyone is cheering them on, however. State leadership and many lawmakers have warned that eliminating property taxes without a replacement plan could create major funding gaps for schools, police, and fire departments. And critics are calling it reckless. The supporters, however, they see it differently. Their argument isn't about blowing up the system, it's about ownership. They say if the government can take your home for unpaid taxes, then you don't truly own it. So with that, Ohio is now a test case for something bigger, you guys. Can a citizen-led movement force one of the most fundamental tax debates in the country without politicians leading the charge? And finally, coming at number 1 is North Dakota. Every other state on this list is debating how to pay for the elimination, but North Dakota, on the other hand, already has the money. The state has an $11.5 billion legacy fund built entirely from oil and gas revenue, and it generates hundreds of millions every single year in investment earnings alone. North Dakota's new governor unveiled a step-by-step plan to use those earnings to reduce property taxes every year until they reach zero. And this is not someday, this is not hypothetically, it's on a defined timeline. The plan starts with immediate credits to homeowners and scales up as the fund grows, eventually covering the full cost without raising other taxes or cutting services. That's what makes North Dakota different. The funding is already there and the math already works. And for retirees and fixed income homeowners, this isn't abstract policy. It's the difference between staying in their homes or being forced out. So, 5 states, 5 very different approaches. Some are fighting foreclosure crisis, some are spending billions, some are heading to the ballot, some are building movements from the ground up, and one already has the cash to make it happen. The real question isn't if property taxes get eliminated somewhere first, it's where. If there's one takeaway from this video, you guys, it's that real estate decisions aren't just about the purchase price. They're about long-term rules, taxes, and policy changes that most people never think about until it's too late. That's exactly what our real estate investing course is built around, helping people understand the full picture before they buy, invest, or restructure their real estate. If this sounds useful, you guys, you can check it out through the link in the description. And if not, hopefully this video helped you ask better questions. Either way, thanks for watching. I'll see you in the next one.